Hi, thanks very much to everybody for joining in on this webinar, and I hope everybody's doing okay as we work our way through this very difficult time with the lockdowns occurring here in New Zealand. Look, what I thought I'd do today is just give you a quick overview as to how I'm currently seeing markets at the moment, and in particular have a bit of a chat around what occurred during the month of August, which was actually a really important month for markets across Australasia. It's interesting when we go through a period like we are now, where you've got lockdowns occurring and the implications both at an economical and a social level. I think a lot of commentators and some investors would look at that and assume it would be a time which would be quite difficult for local markets, when in fact it was actually quite different. The investment returns generated by the markets in this part of the world during August were actually very, very good. So I think the New Zealand market was up around sort of 5% during August. The Australian market was similarly strong, was up some 2.5%. And I just wanted to give you some insights into, I think, the reasons why that occurred. August was one of those periods which we refer to as the reporting season, and it's a biannual event whereby companies are required to report to the market their results for the period ending June 30. And look, it's a really fascinating time for us as investors, because we get this wonderful opportunity to, in what is quite an intensive period, to sit down and speak with just about every company we want with their management, with their boards, to understand what's going on with them with respect to the current operating environment, and to understand what has occurred for them in the period finishing on June 30. So look, it was really interesting, and I guess what was fascinating for me was that as we moved into that period, we'd actually gone through a process whereby the expectations that were inherent in the market regarding the earnings and the results likely to be achieved by the companies were continuously being upgraded. And in fact, really since sort of September of last year, we had an almost uninterrupted process whereby analysts were being forced to reconsider in a positive way the sorts of outcomes that they were expecting from the companies which they cover here in this part of the world. And that was really a function of a range of things. So clearly we've had a very supportive macro environment with respect to interest rate settings, with respect to other monetary policy settings. The government's been supportive, and all that has been useful. But I think what's been really interesting for me has been just observing how well companies have done during that period with respect to reorganizing their affairs, certainly addressing the cost bases within the businesses which they run. And it's really created a platform where companies have been able to deliver much better outcomes than what I suspect a lot of analysts and investors had imagined if we went back sort of 12 months ago. So we rolled into this period, and look, I think, despite the fact that the expectations had been set quite high, I think overall it was a pretty good reporting season. So, if I think about Australia, first of all, certainly the majority of companies delivered results for the period ending June 30, which were in excess of what the market had expected. So that was a real positive. And if I think about that at a sector level, we saw the industrial businesses were broadly pretty good. The financials led by the banks did a good job, and in fact the resources though were the standout, and they really did leverage off a period where commodity prices had been elevated for some time, and their results were a lot stronger than had been expected. We were expecting I guess potentially some challenge at the cost line from labour shortages, from some of the supply side challenges, which I think we're all pretty well versed in. They didn't manifest themselves in such a negative way in the reporting period, but it certainly was something which was quite topical in the discussions that we had with management teams subsequent to the delivery of results. If I look here in New Zealand as well, the results were also very good, and there was a very large bias towards the positive with respect to delivery in excess of expectations. It's often a little more difficult to talk about the New Zealand market in respective sectors, just because we don't have the same level of depth as what the Australian market has. But when I think about individual businesses, some of the retirement sector companies did pretty well. So, your Rymans and your Somersets were both up very strongly. You had companies like your eBosses, which delivered good returns. My Food Bag, which is quite a beneficiary actually of the lockdown situation we currently have, again delivered a pretty good result. It's interesting though, the very best performing stock during the period was Z Energy, which was the subject of takeover interest by an Australian company, Ampol, and so that finished the month up around 19%. So that was a obviously a very good contributor to the index returns as well. When I think about other aspects which were really good during the last month, I think balance sheets is something which we take very seriously, because we think about making sure that when we invest your money that we consider all the potential risks that can occur with your capital, and understanding balance sheets is a very big part of that. And the balance sheets overall are looking pretty good across New Zealand and Australia, and I think that's come about for a range of reasons. A lot of companies went to the equity market during the course of 2020. So in the face of some of the challenges they were experiencing with respect to the COVID lockdowns, they came to shareholders and they raised capital to shore up any weakness that they had within their balance sheets. Those companies which had levels of debt were able to renegotiate some of those facilities with the banks and other lenders, so that was good. Companies did a good job in terms of managing aspects of their businesses like working capital. So again, all this contributed into a pretty healthy platform for Australasian businesses, from where we sit today. And the way that it manifested itself during the reporting season was we saw the announcement, if I think about Australia initially, we saw the announcement of around $18 billion worth of share buybacks and special dividends by companies in Australia. A large part of that was actually the banks, as they repositioned themselves away from some of the conservative provisioning that they had put in place during 2020. But these are big numbers in terms of capital being returned to shareholders, and that certainly supported share prices during the period. We also saw some pretty good dividend announcements being delivered by companies here in New Zealand as well.